All right, we will get started. We're going to cover over what I do in the mornings to do pre-market scans. On the screen, at the top left, you'll see Benzinga, that's news service, and the top right is Trade Exchange, another news service. I get a lot of people that'll ask me, why do I use two news services? Well, Benzinga, you can break it down to see exactly what you want or as much as you want. You can see all the SEC filings as they happen, etc. Whereas Trade Exchange just pretty much shows you news moving stocks, more major news. And they'll both have the same news usually. One may be a few seconds quicker than the other. So, whichever one's quicker on that particular news cycle can mean the difference of getting in a trade, 5 or 10 cents before somebody else. In the middle of the screen, you see my up gappers. This is from Trade Ideas. In the morning when I start, Trade Ideas is not working yet. They're not turned on. So I like the site to find the gap stocks, investing.com. It's /equities/pre-market. And here in the middle, it'll show you the pre-market top gainers and the top losers. The downside here is it only shows 5 of each. The upside is it's updated in real time, whereas a lot of the other sites that offer pre-market screening like this don't show real time. A lot of them are delayed. You may get more stocks that it show, but it doesn't update the price in real time. The other positive here, the top portion, pre-market most active. You may have another stock that's running that's not in the top 5, but if it's got volume, you'll most likely catch it there as well. So there's 2 spots where you can catch it, the gainers and the volume. So that's the site I use early in the morning. So if I find a stock, say the first one, it gives you the name. If you don't know what the ticker is off the name, just click on it. It's going to tell you it's ACRS. So from there, you start doing research to see if you want to. So I use Yahoo for that in the mornings. I start looking here at what's held by insiders and institutions. You can see this is shown over 100%, which isn't possible, but all you need to know is institutions own majority of it. So that's enough. You gotta need to know that. That is, if you're going to short, that's a huge institutionally owned stock. So then what I do is start looking at the diluted EPS and the net income. You can see they're burning about $13 million a month. It shows total cash here at $115 million. So that tells you they've got about 10 months of cash or so. Then I look at the last earning. The most recent quarter is June 29th. So July, August, and half of September. So they've already used 2.5 of that. So you can kind of get an idea what they got left in cash. And then it shows you their total cash per share, which they're trading under cash as of their last earnings. And if it's a heavily debt company, you can see all that here. And for news, you can use Yahoo. More times than not, Yahoo will have all the news that you're looking for. And I'll use E-Trade sometimes, but a lot of times E-Trade doesn't show the news right away. But Yahoo pretty much will have the news. And that's it. I'm sitting here watching scanners and news. I have more scanners I'll watch those pre-market scanners, stocks that are moving, then I'm sitting here watching news. So if something hits the news scanner, then I'll start pulling up, looking on Yahoo at shares outstanding and all that, and start trying to figure out a price if it's moving up, if I want to short it. Now I may start looking at a daily chart, see where support and resistance is. See if there's a good area where I think to start shorting it, or vice versa, go long. So hopefully this explains my pre-market scans. If you guys have any questions, feel free to ask. Now that we're done, I'll take questions. There's not a whole lot to it. Pretty simple. But you got to be pretty quick at doing it, especially if you're wanting to make a decision to get in a stock. The quicker you make your decision on a moving stock, especially if you're wanting to go long on one, the quicker you can get in on a moving stock up, the better off you are. Yeah, investing.com is free.